Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that and has been growing and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers, or maybe skewed that way. But the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, maybe growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that where people need jobs, because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown, and of course that will reverse. But you still got the economy growing at a moderate pace.